Anyway, I'll go through it anyway. I'm going to record this anyway. So, my theory on gold. I'll start from the daily. You got the pattern 1, 2, 3, closed here. On a 4-hour, you'd take it around here, down into this order block. However, I love the crossover of the 100 EMA, 20 and the 50. Sorry, the 20 and the 50, 20 and the 50. And this is my favourite pattern of all. That's why I'd only trade Monday and Tuesday if this pattern happens on a Monday. So it's going to come back up here eventually because of, I know you got a wick here, but these are equalised. It's an M pattern. They're going to be raided. So the market ain't going to go down too far, I believe. And I believe because gold's going down, gold should go up anyway. So just going back to the equalise. It's happened here. You got this high here after it's broke out from this consolidation box here where the M is. Took out these equal lows, which means it's going to come down into these order blocks.
Yes, but I think Sue that we're
I'm just going to mute everybody for a moment.
Other carriers, and I don't think that'd be an issue in that.
So I'll just mute everyone because I can hear in the background. So it took out these equal lows after the M, which would have been a pattern you need to watch because the lows are really big liquidity areas which what the market wants to take out. It took out this void and it's took out this order block here where the initial origin of the move up, which means it's still going down to fill in this void. If you look on the daily, again, sorry, this is the last down candle with significance. Before it goes anywhere, it's going to want to take out this and go back up to take out the equal highs on the 4-hour. But here on the 4-hour, you got equal lows. But I'll start here on the hourly. Sorry, getting the hourly on. Tomorrow, it's going to come down here, I believe. And loads of people keep entering. This is where the origins of this big move down. It's going to want to get back into this area, into fair value, before it drops. Monday, today, has given me a W pattern with equal lows. I know it's a little spike, forget that, but look at the bodies. It's come back up into this hourly order block, tricking people to sell already. It's late on into New York, when everyone's going home, but people think, yes, I'm going to place my stop here and let it drop. But you got this order block here. Now it's showing me the gold's hand. You got one high here, one high here. It's not going anywhere until it comes up and takes these stops out, because some people have already sold up here and they've moved the stops down here. So people are already in profit, thinking, yes, it's not gone above it, it's going down. So the market reaction, market makers are going to want to come up into this order block. If there's one, just use the one. If there's 2, 3, use all 3. Yeah. It can hit the wick or the body. Normally it's the body, but the wick is valid if it takes out these highs. I can see it coming up to this order block here, then dropping off. And guess what? It's given me another sign. It's done a W pattern today. That's given me even more major signs that the market's going down, because people who have bought here have placed the stops. Or people who have bought down here, so they bought here, they put the stops here. So to me, that is an area of liquidity as ICT trains. And now it's give a 1, 2, 3 bar pattern. The fourth will come in and you probably get some profit scalping down into this area. Then during Asia and London, it'll probably meander like this, then go boof. Check out these highs in London, give Tuesday the high of the week and then drop like a brick into this daily order block I mentioned earlier. It may want to go further because look at these here, equal lows. I'm only looking at these equal lows if and when it goes through this daily order block. If a daily bar closes below this low, it's going to fill in this void, but I don't think it's going to yet. I've got a feeling it's going to hit this daily order block because of the way the dollar's performing, and come back up and do a M pattern and then drop, and that'll be the raid in about 6 months or so, or probably even a year because it's on a daily chart. Let me give you an example about stop raids going into an order block. Let's have a look at a trade I'd done. Was it pound USD? Pound USD last week. Sorry about that. Sorry, here we are. Getting confusing myself there. Monday and Tuesday. Monday low. Tuesday high. Didn't go into any order block because it's a liquidity void. But it come into the origin, the mitigation and breaker block, which I've marked here. On the 15-minute, it came up and took out this high into the mitigation breaker block and retraced under. I didn't take this because I was asleep, but I took this one here and it meandered and finally come down, hit my target and took out these equal lows here. So when I got here, I was looking, weren't for this low, I was looking for this low. But when it come back up, I weren't scared to take it out because I saw these equal lows. It's going to come back down in New York and hit it. Was it last week? Monday, Tuesday. There's the 50% line. I've seen this big move down, took out this low, back up into the mitigation breaker. If I put a line on here now, go into the 15-minute. Move that out of the way now because I know where I am. Equal highs, order block. Comes up into an order block, into the mitigation, takes out a high. See that high here of the order block? Here. Takes out this high, drops down, the EMA is in my favour. 1, 2, 3, 4, you take it here on the 5-minute chart. I got in here, well I would have if I caught it. I only got in on GU at the time. Market surges up in London into a 15-minute order block. That would have been an hour. Didn't take out a stop, but but it took out this swing high here, and you'd have got in around here on a 5-minute chart with a stop up here. If you missed that, you'd have got in here in New York. EMAs are still like that. 15-minute order block, takes out stops into an order block. Get in here. Let's go into Friday, eh? Hourly order block, straight into it, takes out the stops, traces below her, down. Even today, if you want to trade, if you want to scalp, you can use these all the time. 15-minute order block, straight down, didn't take any stops but did here, and you can take it up. Let's go into a better market condition where this actually works. A lot better. The market a bit scrappy. I like the DAX. Got lows here, comes up into an order block, but don't sell yet until it takes out the stops. Comes back up, takes out the stops into an order block, drop. Back into an order block, drop, equal highs. I wouldn't even touch that sell because it didn't take out that stop. You use all these candles here. You got 3, 4, that's an order block on the 15 minute. Come back up into the order block. On a 1 minute, you'd see some stops being taken out here and drop. Market moves, takes out a swing high, comes back down into a bullish order block, comes back down, guess what, takes out the stops. If you look on the 1 minute chart, it's like looking at a higher time frame going down a bit, takes out stops here, moves higher. Once take out stops, going into a bullish order block. Don't happen here, you want to see it come down to here, so wait. Five-minute chart, bullish order block, bearish order block, comes up, takes out the stops on the 1 minute chart, straight down. Moral of the story is, as I've just explained on here, this bullish order, bearish order block needs to be hit at fair value before it drops. Traders are going to be tricked by the market makers. Think it's going to go long, but also it's going to be tricked for people who have placed the stops who are already in a sell here. It's going to take it out and then drop. So my expectation here now is it's going to come down into this order block and take out some stops here on a lower time frame, back up into this area and drop. Then take out liquidity at these equal lows here, at least. One minute. And look at this here on the hourly. This definitely wants to come down here. So that's a daily order block. Take a screenshot of this now. It's going to be bullish after it takes out these lows on the daily. There'll be a spike and then go back up to take out these highs. Oh my God, I didn't even see that properly. That's coming down. To take out these lows, equal lows, It'll probably also be a optimal trade entry. Yeah, 50-60% level on the daily, and it'll go back up. Yeah, look at these lows. It's coming down here before it goes back up. So it come down to the daily order block, have a spike, take out the liquidity for people who already bought from down here or even down here, and the place stops going up. Take it out here and then back up. But the initial short term, it's coming up here and down, or at least, or could be as far as down here, then spike back up. If you see a big reaction from here, then look at trading up until this level here. Try and give you some more examples. H4 here, drops down below, comes back up into a bearish order block, taking out stops here, then drops. On the hourly, you see this one into it'd be a bullish order block on the hourly here, taking out stops up. See the stops taken here, down. You see some order block around here. You just need to go back on your charts. I've seen one straight away here. Happens on every time frame, every level. Bearish order block. Stops taken into it. Goes up. This would be a 4-hour order block because all them down candles. Takes out the stops, up. See that candle here? Into the order block. Takes out stop. Do not trade until it takes out stops, then up. This would probably be a daily order block. Trades down by the end of the week, Monday, Tuesday. Takes out the stops into the daily order block. Take the free 4-bar pattern up. I'll go even further. These down candles here are order block. Takes out the stops. Do the 3-bar pattern up. This one here. Comes down, but you probably can get in here on shorter time frame and get this move, but if you're trading longer term, then this is what you wait for. You see it come down into an order block, it comes back down, takes the stops of this one. That's your cue to go on the 4-hour. So your 4-bar pattern here, let it go. Here. Takes your stops on the hourly, 4-bar, into the bearish order block here, the blue one. Down. I'm doing this as I'm going along, but using the Monday and Tuesday range will be a lot easier. So look at this. Order block. Takes out the stop, spikes it, closes in the range of the order block, goes up. Comes back down into an order block, takes out this stop, rises. Comes down into an order block but closes below it. That's where you know it's going to continue down. But guess what? Comes back up after taking out a low, into an order block, taking out the stops, down. You need to get my drift on this now. The best way of learning this is go back at least 6 months on the 4-hour and mark every bullish and bearish order block where a move has started and see where it's come down to or up to, and look at it's taken out any stops. That's all I've got to add, so I'm going to or neutral. Have you got anyone got any questions?
It's really bad.
Everybody wants to chat.
Hey, funny the way. Stop it tomorrow. Tomorrow no food center.
Food night clearing.
Okay, just drink water and sleep. Go to sleep. You need to clear thumb with me. It's disgusting.
Yes. I went puppu. I did.
It's not good for the good health, man. Okay.
Has anyone got any questions?
Whenever I was feeling on the cards, I went puppu that time. After lunch.
Can you tell us about the consolidations areas for the avoid them?
The what? Sorry, say that again. Sorry.
Blue and got white. Blue.
Whoever's speaking in the background, can you mute yourself?
For lunch. And then I know I went, I think, after lunch.
I don't know who it is. I can mute. That's better. Sorry, say that again, mate. Yeah.
May I ask a question, please?
Yes.
Right on the screen, there is a little consolidation area. How can we avoid from this line, or how can we make a profit from there? Or on small times, maybe there's a small trends in there.
Right here, I assume.
Yes.
I assume. A minute. You think this box here, yeah?
Yes, exactly.
Scalpers. If I'm a scalper, I'm looking at these hourly order blocks here and trading on the
Yes.
5-minute time frame. So, for instance, if it's in a consolidation box, I'll be looking at you're looking at say you trade this day, I'll be looking at the bodies are low here, and especially this order block here,
Yes.
because that's the range high where the move took down. So if I see a pattern on the 5-minute chart going down, I'll be trading that. Same here, but this candle's too big. He hasn't given me an hourly order block.
Okay. This is much more clear now.
But if I'm going to, if I see this, for instance, got this high here, see a spike through the previous day's high, I see a pattern like this, I won't trade anything until it takes out a previous low, it comes back up into a mitigation area, which this first down candle here, this first down candle from when this low was taken out is the origin from when it went up to take out this high. Then you look for it to retrace back up into that area, then you look for the pattern to go lower on the 5-minute time frame or 15-minute, because the hourly. It's like here. Monday's up. If I'm trading Monday or Tuesday, you got these down candles here. I'm looking for this area. It's took out these stops. I'd have these lows, the lowest low here. I'd wait for this high to be taken out, which was here. And I'd be looking for a 5-minute or 15-minute pattern to go higher. Okay, it's come into this order block, took out these stops, gone higher. But it's risky on a Monday and Tuesday. But look at this. Monday's low, Tuesday's high. Got this order block here. I'll first be looking for this low to be taken out. Didn't happen. I'll be then looking in London for a move down on the 15-minute chart and then give me the pattern. I'll probably get in around here. I'll give you an example. I'll put it on. It's been about London. 9 o'clock, 7 o'clock my time, which is European Open. If I'm bullish, I want to see a move down after 7 a.m. UK time. If I'm bullish, so I'll go on the 15-minute. I haven't looked at this yet, and I see this move down into a bearish order block. Hits it perfectly. Then I wait for the 3-bar pattern, 4. Then I'm getting in here on the 5-minute chart. The EMAs are confirming it as well. So I'd have got in here. I'm looking
Yes,
for
this is
stops to
much
be
more
taken
clear
in
to me.
London. I won't get in here if I'm bullish because the move happened. If the move after 7 a.m. UK time, see that's 9 o'clock on my platform. It moved up. To me, I'm not looking for any entries then because I wanted to see it come down. Where this spike was there, I wanted to see that happen here. Then I'll take my entry there. But I need to see the move go down in London Open. This is where my training from ICT comes in, and I'm sure the training from the Beat the Market Makers comes in as well. When you're bullish, this high come in, takes out the stops. Once this low's taken out, which is here, you're looking for a bullish order block, which is this is an hourly. This low is taken out, so this is the bullish, the order block. So this low is taken out. You won't see it come up. Take out stops, then sell. Comes up again, takes out the stops here, sell. Use the pattern here and here. So it comes up to here on Wednesday, because that is below the 50% of Monday and Tuesday. 1, 2, 3, 4. You take it on the 5-minute chart on the 15-minute. It goes up after 7 a.m. UK time. That's what I want to see. The next day comes up into an order block. 1, 2, 3, 4-bar pattern, 5-minute chart, sell. Bullish, bearish order block on a 15-minute. Takes out the stops. 1, 2, 1 minute. Comes up into the bearish order block here. Takes out the stops here in New York, but it's also went up in London Open, but then it took the stops out in New York down. Next day it comes up into the mitigation area, which is this one here. So if you trade in Asia, comes up into the mitigation block. 1, 2, 3, 4. You take it around here, stop above there, you got that move. Next day, comes down into a bearish order block, even though I'll still be bearish, but if you want to be a scalper, comes down into bearish order block, takes out the stops. 1, 2, 3, 4. The 5-minute would get you in here, took out the stops and close above the low of that candle, you get that move. Mitigation area. Didn't hit it, so I wouldn't take no trade here. Bearish order block. Takes out the stops here on a 5-minute, down, if you're a scalper. This low here. If you see a low being taken out, then runs through the high. That's your candle you're going to be looking at for your breaker. It's the initial down candle which took out this low here. So it come down, took out this low, so you're looking for an area to come down into to go back up. See some order blocks here. Takes out this low here, you're getting in a pattern here, up. If you missed that, same pattern, another order block here. Takes out this low, getting your pattern up. Comes up, takes out its eye, down into what? A bullish order block, takes out this low, shoots up. Bearish order block, comes down, takes out this low, you'd have lost because this news day. Always look for where the move originated from. And if the move originated to take out a high and then retraces back below that area, that then becomes a breakout mitigation block, which you look to sell from rather than buy. As I mentioned, you've got this order block here, but also as a mitigation, small mitigation block here. This little down red candle is a mitigation block for something here where it takes out the stops on the 15 minutes. Have a quick look. So here, so mitigation for this area be taken out. It comes down into this order block here, takes out a low into an order block on the 15 minute, which means it's going to go higher. It takes a long time to actually see. Look at this now, it's flying down. That means one thing, it wants to get somewhere. You've got an order block here. This is what I think will happen. So screenshot this. Order block on the 15 minute. Spike down below this area. Here. Check out the stops before coming up here and meandering through Asia to check out the highs and down again. It takes a while to get your eyes used to it. But if you follow my YouTube videos and my market reactions, etc., my recaps, you'll see where I'm putting my order blocks, and you'll understand after the Monday and Tuesday range has been established. Because once that's been established, all you got to do is look at the higher value and the lower value of Monday and Tuesday, and where are the hourly order blocks. So have a look at last week was a bit of I'll give you a simple one to start with. This one wasn't that great, but I'll give it a Monday, Tuesday high. Comes down. If you're bullish, it has to be in the top 50% of Monday, Tuesday range. So if you see it coming down in London, you're looking for the nearest hourly order block, and it's here. Then you're looking for a 15-minute 1, 2, 3, then ends on the 5-minute up. And you put your stop below wherever the nearest one on the 15-minute chart is. If you're brave enough, you'd have won that. Let's do it on this one, which is a bullish one as well. Monday, Tuesday. Let's clear all this a minute. I've only got 3 minutes. I need to be quick. Wrong one. Right down to 50%. You've got a bullish order block here. It's been violated, but it hasn't closed. Wednesday, you got a bullish order block here. It didn't come down to it, so I'd have missed that move because I didn't want to. If I see it going up, I'd think that would become an M pattern and come down. But the EMAs are good. But here again, into this order block here. You've done the pattern 1, 2, 3, 4. You could get in on the 15-minute chart. If you just stick to the pattern and it goes above an order block, you're good to go. Look at this order block. It's good to go, but I wouldn't personally get in that because of my training with ICT. Do one more, about 2 minutes. When it chooses range, you're looking for 50%. Looking for it to trade up in London, which it does. Order block. Comes up into it, as I expect. If you go on the 15-minute chart, I suspect you will see something as a stop run. There's your stop run into the 100. 1, 2, 3, 4 don't happen. You see the pattern again. 1, 2, 3 happens here. 5-minute chart. You get in here. Let it go. Oh no, I'm in the wrong place now. Sorry guys. This is, you see the pattern going up in London. Got the high here. Comes up in London. Look for the pattern. You get in around here. If you look across, it's already took out this high here, and then you're seeing it drop. This ain't a perfect example, but if I'm bearish, I want to see it go up in London into this mitigation. If I see this here, I know it's going to take out this high. Once it takes out this high, I'm looking for the pattern to sell. But I want to see it take out a high before it sells. Right, guys, I've got to go. I've only got 1 minute left, but if I get time tomorrow, I'll do another one. All right, guys, take care. I'll record it anyway.